Thank you, Charlie. And hi, guys. My name is Sam Fletcher, and I'll be talking about the financial management part. Now, to start off, we'll talk about the identification risk, and for us, it's flooding. Now, to reduce the chance of flooding, well, our main construction will be elevated to keep water away from the subframe. Along with that, it will also be built on a relatively flat bank, and there'll be no trees within 100 feet of the premises. And as for the second one, it will be cold weather. If it's anything like last year and that ice is coming back again, it could do some real damage to the boats on there. So with that in mind, our docks will be anchored in and shut down during the cold months. And there'll be a large concrete foundation under the water to support the main decks connected to the building. And as for competition, our biggest competition is cave run lakes. But the big difference for us is that we will offer alcohol sales. And by offering alcohol sales, we'll be able to significantly differentiate ourselves from other marinas. And as for our cash flow statement, as you can see, we have our revenue spread out throughout the entire months here. We have our contributions from our partners along with our loan that we requested. And also for our expenses, we have a lot of one-time purchases and a lot of repeat purchases, such as our inventory, our refueling of gas, and our building and land costs. And we also have our interest that we're paying throughout the entire year, and all that combined gives us our cash flow for monthly and yearly. And in 2022, the biggest difference you can see here is that a slight increase on our revenues, and a lot of the one-time purchases are not coming back this year or for the next year, and and along with that, our cash flow are also going back to increasing. And it's the same thing for 2023. Our revenues are increasing, and so is our cash flow. As for our income statement, the biggest difference here is that we have our cost of goods sold, which helps us get our gross profit. And we also have all of our expenses returning back here for this one, and all of that combined helps us get our net income. And the big difference for 2022 and 2023 is that our revenues are also increasing, our cost of goods sold are increasing, and our net income is also increasing. Now, when it comes to our balance sheet, we have all of our assets here, which is cash, inventory, property, and equipment. And as for our liabilities, we have the loan that we paid off that entire year, along with the remaining loan that we still have to pay. And as for our equity, we have our partners' contributions here, which is 24,000 each, which gives us a total paid-in capital. And we were able to find a partner's total equity and a total liabilities and partner's equity as well. And for 2022 and 2023, the biggest difference here are our assets, total assets are increasing, our total liabilities are decreasing, and our partner's total equity is also increasing as well. Now, for our funding request, we're requesting a loan of 121,517, and this will cover the fixed costs and that come with starting the marina. 60,000 would go towards building the marina and the structures that come along with it. 26,517 is used for the equipment that is needed to sell gas. 15,000 is going to be needed for a 6,000-gallon tank, and the remaining money will be used for food and snack items, stock drinks, and packaged beer. And as I mentioned before, each partner will contribute 24,000, which will total up to 120,000. Now, for our return on investment, for the first year of 2021, our return on investment will be 20%. In 2022, it will be 18.7%. In 2023, it will be 22%. Now, when it comes to explaining our financial revenues, we have four sources: boat slips, gas, beer, and products. Each source of revenue was calculated individually and then totaled up to configure the monthly revenue. Now, as for why our increase overall went up to 10% and 12% for the following years, 2022 and 2023, in large part is due to people bouncing back from the financial burden. And it's also a sense of them wanting to regain a sense of normalization pre-COVID. Now, for our boat slips, a lot of our boat slip prices were based off Kentucky marinas and average marina prices in general, and this helped us configure a fair price range. Now, as for estimation on how much of our revenue came from boat slips, it varied throughout the months. Now, as for our gas revenues, we determined that the average size would be around 21 feet with a fuel tank of 100 gallons. And this gave us the the average revenue per person would be around $260 to refill. Now, the expected refill would also take place every 4 weeks, which serves as our basis for the revenue of gas. Now, this amount would also vary as well as gas is heavily taxed. Now, as for our beer revenue, a successful bar earns anywhere from around 25,000 to 30,000, and that's at 30,000 a month, and that comes with their food and drinks, according to Darlington. So it was a reasonable assumption that our best months would be 10,000 just from beer alone. And with this in mind, it was also reasonable to have a markup on the beer of around 250%. Now, as for our expenses, our fuel and pump installations are estimated around 26,517, with the building cost at 60,000. And our utilities are also based on the state of Kentucky. So water, electric, landline, internet bill was totaled around $241 and some change. And our wages would be around $5,292 and some change monthly. And that would total up to 63,510 yearly. Now, to start with our inventory and restock on our inventory, both cost 20,000. The refuel of gas would also cost 15,000. And our beer and insurance license were a one-time purchase for that year, and we would have to repeat it the following year, but it would cost around 1,800 for the beer and 2,500 for the insurance. And our interest payment is going to be $2,157 at 2.5%, and we're expected to pay it off within the next 5 years. And here are our references, and James will also talk to you all about operations. Thank you for your time.